After today's sell-off, triggered by what is definitely a more hawkish Powell, what does this mean to the broader averages? And on this screen, we've got the 1 hour time frame on the left, the daily time frame on the right. We're going to take a look at the NASDAQ, the S&P. We'll take a look at bonds as well. And even where could we find relative performance? Where could we find some support that could be worth buying into if we're going to treat this potential move as either an oversold buy opportunity or maybe even a buy the dip, depending on the market structure. We'll take a look at the target rate over at the CME FedWatch tool, and we'll take a look at some setups that I have on my radar for short-term swing trades. For those of you that may not know who I am, I'm Raghee Horner. I'm the lead trader at the Simpler Futures website, or room, here at the Simpler Trading website, and also the Sector Secrets Mastery. All right, so let's jump into this. NASDAQ. Look, it's hard to be really bearish after today's candle, which, granted was a down one. We haven't even taken out March lows. In fact, when it comes to the type of pullback, retracement, sell-off, whatever the word is you want to use on the NAS, we barely pierced and we closed above a 50% retracement. So this is just a 50% retracement of the small amount of trading that we've seen so far in March, but certainly not new lows. So before we get sort of swept up into the, oh no, Powell is bullish and the markets are going to get rocked, let's just kind of put some lines in the road. All right, let's do the same thing with the S&P. What we have here on the S&P is a slightly more bearish move. This is something that's exceeded the 618 retracement. We've gone past 4,000. We've run down a little bit below that 50%. Not so far below that it's a disastrous kind of sell-off, but certainly a little bit more bearish than the NAS. When we take a look at some sectors, which we'll do together here as well, you'll see why. In fact, let's just do this now. XLK is the king of sectors. It's weighted heavily within the NASDAQ, the S&P, and the Dow. Take a look at the XLK. Yeah, it moved down, but if I do the same kind of retracement, barely a 50%, even more resilient than the NAS. It goes, if we're going to think about where this would map to, it makes sense why the NASDAQ was as resilient as it was. Now, if I take a look at XLF, NASDAQ has no weighting in the XLF. It's weighted more so in the Dow, which actually went, I think, negative on the year, and it's weighted more in the S&P. Ultimately, when we see this kind of move to the downside in XLF, this is going to drag the S&P and the Dow down while the NASDAQ isn't affected by this at all. So different sectors and their resilience, or in this case, the degree of sell-off, is going to make a difference depending on the index you're looking at. However, my sector traders, keep an eye on XLF as we get closer and closer to that 200 propulsion, because as of today, we traded into that daily price movement range. This is the volatility analysis that follows the typical historical movement based on the day of the week. Now, those of you that are already fluent and familiar with HPMRs, those are the historical volatility ranges based on the hour of the day. So they plot completely differently on the time frame. So if I were to place the HPMR, hypothetically, on this daily, the zones would be in a completely different place because they're based on hourly ranges as opposed to session ranges. And we have sunk into that range on the XLF. Pretty exciting to see what we're going to do off the 35 to even, as you can see here, around the 34.90 level. We'll definitely talk more about this. All right, so let's talk about bonds, because I think bonds were probably the most unusual reaction. It would go to say that if we have a much more hawkish Federal Reserve, Powell was talking up a more aggressive pace of hikes, maybe even ultimately a higher target rate probability, why wouldn't bonds sell off? Well, we might say, Rog, they've been selling off kind of dramatically for a little while. This is true. But on a day that Powell has walked up expectations, let me show you. You can see here, this is the target rate probability graph over at the CME group. So kudos to the CME group for putting such an amazing tool together. Take a look at the June probability. We're up at 5.5 to 5.75%. That's more hawkish than we have seen in a bit. And what's really most interesting is even though it's not highly probable at the moment, this 5.75 to 6% column is about as visible, it's about as prominent as it's been in a while, and it becomes more prominent as we go into July and September. So this is a higher target rate probability. Equities have to respond bearishly to this because stocks love cheap money, and this is the opposite of that. This is a higher target rate probability, higher lending rates, right? And this is higher for longer. Both of those things equities don't like. But despite that, significant ratcheting up of a more hawkish possibility. Equities haven't even taken out the March lows. So let's not get ahead of ourselves in terms of what this means. It created, in most situations, anywhere between a 50% and a 618% retracement of the March action thus far. Tomorrow is day 2 of the Humphrey Hawkins testimony. And a lot of times it's a lot less fireworks because we have collectively as traders and investors reacted, maybe overreacted to what Powell said. And tomorrow we get to see if he decides to sound a little less hawkish or just sounds the same, in which case, well, been there, done that, already responded to it. Yes? So this is why, and this is how we can measure what that weakness was triggered based upon. Okay? So ultimately what I want to focus on are where those opportunities are to the long side. And yes, I'm very interested in daily price movement ranges in the S&P. I'm interested in daily price movement ranges in the NASDAQ, in XLF. We hit one in Meta today, right? So there are a number of long positions that are viable. See how we hit that level in Meta. That's exactly the kind of thing we want to do. Ultimately, we'll see what day 2 brings. This is the way I'm positioning. I'm still bullish, still looking for opportunities to buy oversold levels or dips. If this type of trading, a slightly longer term, not day trading, slightly longer term than maybe we've done in the past year or so, but what I would consider this is short-term swing trading. Trades that would last anywhere from a handful of days to maybe just over a week. Staying more nimble, focusing on these structural support levels, mean reversions, and volatility support levels via the DPMR. If you're interested in this and just want to learn a little bit more about how this could be helpful, join me tomorrow, Wednesday, March 8 p.m. Eastern. You can register for this over at simplertrading.com/clear. I've got new chart examples. So if you caught my last webinar, we're going to talk about daily price movement ranges and short-term swings. Got new chart examples, new tips and tactics that I'm going to share with you in this presentation as we prepare for the remainder of 2023. This is my 2023 game plan. We're going to start to be far more active in these short-term swings. Again, not day trading, but still quite nimble. If you've gone back to the office and can't day trade anymore, no problem. A lot of folks can't. And a lot of folks don't want to. They said, Rag, I'd like to slow this down, but I still want realistic targets in what has been a very topsy-turvy kind of market. How do I do that? We're going to talk about 1-hour time frames and overnight positions. We're going to talk about daily time frames and overnight positions and how that's been, number one, tested for the past 10 months on an indicator that has been time tested for the past decade. We've automated the process. We have over 100 symbols that are in the DPMR. I think we're at 100 right now. We're continuing to add more symbols, stocks, futures, ETFs. And so I'm super stoked to share with you what we've got going on. Tomorrow, 8 p.m. I'll see you then. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.